We're going to do a brief video on Wayfair stock news. We've got a daily chart on here for you of Wayfair. It's got a 5-day moving average in green, which is very difficult to see. It's got a red 20-day moving average, and it's got a blue 200-day moving average. Let's go back up here real quick. And we hit a high in Wayfair of about 326 back in January of 2021. We came across and rode up. You can see support here, here, and here for the 200-day moving average, and finally it broke through the 200, rallied, and began its bear market roughly right around here in August of 2021. Let us know in the comments section below if you believe in moving averages. If you do, say yes and tell us why. If you don't, say no and tell us why. We'd love to hear from you. This stock basically broke down, and anything below the 200-day moving average is considered a bear market in stock. So let's take a look. At least in my opinion it is. So let's take a look and see what happened here. This stock again made its stab down in a bear market, hit a low in October around the 13th, and rallied right back up and tested the 200-day moving average, which by at this time had become flat. It hit the 200-day and went straight into a very serious decline. The price respected the 20-day moving average, this red line all the way down pretty much, respected it very nicely, and continued really to respect it all the way down until the end of May of 2022, at which time, as you can see clearly, the stock went sideways. Now from the end of May all the way through till today, really this stock has been right around, oscillating back and forth, give or take the $55 level. You know, you can argue one way or the other, but roughly around the $55 level until just recently. And in the last few weeks, maybe the last 3 weeks, we've gotten as high as 76 bucks. So we're starting to break out to the top side on this stock. It's hard to see right here, but we are definitely getting a little bigger and a little more aggressive in this stock. But our 20-day moving average clearly belies a problem, or shows us a problem. The green moving average here is all over the place, so there's nothing you can do with that in a sideways market like this. But the 20-day was essentially flat, started to rally up and support this price as it came out of the end of August and into about the middle of August, late July, middle of August. But the 20-day has turned down now, and so we have a slight turn up on a 5-day, but a pretty significant turn down on a 20-day moving average. And keep in mind, we're already significantly below a blue 200-day moving average. So from a technical perspective, this stock is deep in a bear market. There's no question about that. And there's really no getting around it. We're looking at a distance of about today, let's call it, right, where, as I discussed, this about $55, and our 200-day moving average is about 107 roughly. So the way this stock trades, I don't see a test of the 200-day moving average anytime soon. We could certainly get a test of these highs set back in the middle of August at about 76 bucks. That's not that far away. You know, that's about 20 bucks. We could get that. I'm not really sure I see that right at the moment. What I see more realistic for this stock is, you know, I hate to say it, but I see some downside risk in this stock right now. Probably, I'm not going to say it verbally, but down in the lower ranges down here is certainly possible. This area right through here, I don't want to be negative. I see that possible. I also see a challenge, a rally up to the low 70s is possible, but using moving averages right now here is worthless because they're essentially flat, and you really are not going to be able to make a reasonable prediction that this stock's going to come up and test this 200-day moving average, because I think best case, if you got a rally in a traditional stock, you'd get to the low 80s by early October, and I don't really see that with this stock right now. Normally I would say that, but I don't see it with this stock right this second. So I would say the stock's in a trading range. The moving averages have to be discounted, and we're, as I said, in a trading range probably down to this area here, and maybe up to the low $70 range, back and forth. It's a trader's market, it looks to me. Now, if this stock gets above the 20-day moving average, as we're looking at right now, if it gets above this significantly and the 20-day starts to turn around and head back up, we'll obviously at that point get some support, or at least some turn in the 5-day moving average. So if the 5-day came up, got above the 20-day, prices above the 20-day, and we get an aggressive rally headed back up to 76, then my analysis could change in this stock, and we might be able to put an $84 target out there, but that would probably be in the first week of October. But as I see it right now, I'm more inclined to think if the stock rallies, it might rally to the low 70 at the most. And again, I see some downside risk in this stock. Not a huge downside risk, but I see some downside risk in this stock. So it's a trader's market, all in my opinion, and all for entertainment purposes only. I have checked earlier. We do not cover Wayfair. I will take a look and see if we can add Wayfair. It looks like a nice stock. But I would say right at this point, we have to conclude it's still in a bear market and give it a little time, probably over a month, to see if it can work its way out one way or the other. We do have other ways of looking at stocks, and our main way at RBAM Research is with algorithmic trading. These are put out every morning before 7 a.m. This was put out this morning before 7 a.m. for the 12th today. We have 1, 5, and 20-day holding periods on here, and for stocks we have 190 plus stocks that are buys only. You can see not all the stocks always have entry prices, but you can look down here today and see General Electric has some, Ford has some, Bank of America has some. And the way these work is, assuming your own analysis is a good idea, these are for entertainment purposes only, but if your own analysis says it's a good idea, you buy in this column and close out at the end of the first trading day. So buy today, close out worst case just before trading ends tomorrow, and take your profits as soon as you get them if you do. Same thing for the 5, same thing for the 20-day. Buy today, take your profits as soon as you get them. Worst case, close out at the end of a 20-day holding period. So that's how these work. The holding days are all trading days, not calendar days. And again, these are all for entertainment purposes only, but they're great to look in before the sessions open each day, Monday through Friday, and take a look and see what we think about it from an algorithmically generated trading perspective. You can get them all for free, no credit card required, at rbamresearch.com. We cover 190 stocks, the major forex pairs, BTC crypto, and the most liquid futures contracts. There's a link in the description below, rbamresearch.com. Just click on the link, go there, sign up. Absolutely free, no credit cards required. If you like this video, please click the like button. If you want to subscribe, please do that. Again, leave us a comment on whether or not you like or dislike technical analysis, and especially moving averages. We'd love to hear from you. Some people like them, some people hate them. We think that they're great for some things, and we prefer algorithmic trading for others. Please let us know what you think. Everything you've seen or heard on here, including the entry prices and our opinions, is for entertainment purposes only. You have to do your own analysis, and you can only use our information for entertainment purposes only, and you definitely trade at your own risk.